Smokers, folks, I hope you are absolutely ready for an insane next few days in the stock market. And I mean, absolutely insane. We got a lot of big stuff going on. I want to prep you for exactly what's about to happen here in the market, exactly what's going on. Hope you guys enjoy this. As always, thank you for joining me. And let's just get straight into this, guys. First thing is going to be interesting is if you haven't been keeping track, Bitcoin and Ethereum have made some big moves over the past few days here, and specifically over the past 24 hours. So this move here was about 72 hours ago. Ethereum, which is the second biggest crypto, obviously, is up over 30% in the past 5 days. It made this massive move about 72 hours ago, and then a really abnormal, freakish upward move 24 hours ago. And so Ethereum and Bitcoin are moving. This will be interesting to see what this does to the overall stock market, because basically it's kind of like what came first, the chicken and the egg type thing, right? And when it comes to the crypto market and Bitcoin and Ethereum, it's just like, do these move the stock market, or does the stock market move these, right? And so I think we're going to get some clarity around that. Overall, I can tell you, Bitcoin and Ethereum are risk-on assets. So if the financial markets in general are feeling a little more like, hey, let's start taking some risk, right? Bitcoin and Ethereum are going to make some massive moves, and that's exactly what you're seeing. We get a little risk on in the market. We get a little level of comfort out there, and look at the move Ethereum makes in a matter of a few days. Like, it's not like this is a long period of time. So it'll be interesting to see how that shakes up the market. Monday, we'll see kind of from pre-market what's going on there, okay? Now, Monday morning before the bell, Goldman Sachs and Bank of America are both reporting earnings. These are two of the last giants, I would call it, in the financial space to report their earnings. We already got Wells, we already got JP Morgan, Morgan Stanley, folks like that. So these are the last two. It's been a mixed bag as far as earnings go for the bank so far. So we'll see kind of what happens. And it's interesting because I was just actually reading this recently. I thought this was interesting. Bank of America upgrades Goldman Sachs, says it will thrive from coming economic storm. So assuming there was any sort of economic devastation, Bank of America believes Goldman Sachs would make a bank in that situation. They did that obviously in 2009. If you look at Goldman Sachs net income in 2009, it was unbelievable. Led a lot of folks to resentment of Goldman Sachs because they got a bailout. And then next thing you know, after that bailout, they're making money hand over fist. And so that's part of the reason there was a whole movement against Wall Street and whatnot, because everybody's like, you guys got bailed out, now you're making all this money. Like, come on, man. And also a lot of people blamed Wall Street for putting us into that financial crisis, because a lot of the derivatives and things that they were doing that obviously messed up a lot of things. Now, this is very, very intriguing. So if you didn't see recently, Goldman Sachs upped their dividend, okay? So they upped their dividend to $2.50 a share from $2. So meaning essentially every one share you own at Goldman Sachs, you're going to get at least $2.50 worth of dividends per year. And then also Bank of America increased their quarterly dividend to 22 cents. So both of these companies did, obviously up their dividends recently. So the thing with that is companies usually don't up their dividend, especially Goldman Sachs. That's a pretty big move from $2 to $2.50. They usually don't make a move like that unless they're pretty darn confident in what's going on with their business model. And so I wouldn't be surprised if Goldman Sachs and Bank of America both report some pretty respectable numbers. And from the other banks we've seen, it hasn't been a disaster. It hasn't been a great bank earnings, but it hasn't been a disaster. And as far as guidance goes for these companies, it's kind of been like, yeah, meh. It hasn't been like, oh my gosh, the whole world's ending. Like, this is awful, right? We got a massive recession here. You just look at the guidance and it's like, no, it's not, look at the commentary these CEOs are talking about. It's kind of like, well, cautiously optimistic, I guess is the best way you can kind of put it for these banks. And so we'll see what happens here with Goldman Sachs and obviously with Bank of America. For me, Goldman Sachs is actually my favorite investment bank. As far as the commercial side, and obviously they're into more than just commercial side, JP Morgan's my favorite. But Goldman Sachs and JP Morgan are the only two big banks I pretty much ever owned in my whole history of being in the stock market. They're the only two I really trust out there, okay? Next up here, Netflix. So Tuesday, after the bell, Netflix is going to be reporting earnings. Now, Netflix was a darling of the stock market for like a decade, okay? Basically from about 2011 roughly through about 2021, for about a decade, Netflix was a darling of Wall Street. It was a beautiful stock. It performed amazing during that 10-year time frame. And it's anything but a darling now at this point in time. This is year-to-date chart. Netflix is down close to 70% year-to-date, right? And the market cap's dropped dramatically. It's $84 billion market cap now at this point in time. Obviously it's just a super famous company, not just in the stock market, right? But in the overall world, because, like so many people use Netflix either free because they use a family member's or friend's membership, or because they actually have it, right? And so this has just been a stock that's been in a very, very tough place. Their growth rates have dropped way down. They obviously got a huge boost from everybody being home for Rona, right? So now there's a lot of talk about them going to potentially an ad-supported model as well, so they can start making advertising revenue on top of subscription revenue. So we'll kind of see what happens with that. I think that's a big potential for them. I think that's been a big potential for them, but it seems like now they're actually seriously trying to do that, right? And if we look at the numbers that are expected here from Netflix, basically 9.5% revenue growth for this company, which is, let's just be honest, this is much slower growth than you're used to from Netflix. Netflix is, usually a double-digit nice gainer. If we're talking about this year, analysts only had them growing 8.8%. That's a big part of the reason why Netflix is down huge this year, because people are looking at it and they're like, this is just not an exciting year for Netflix whatsoever, right? EPS is expected to be right around the same as it was last year. Last year, 297, 296, which is not necessarily a good thing to see. If you're going to see revenue go up nearly 10%, well, you usually want to see your bottom line, especially if you're a profitable company, right? You usually want to see your bottom line go up at least 10% as well. So technically, the EPS is supposed to get a little worse, right? So that's not an ideal situation. And next quarter is supposed to be even worse. 319 they did a year ago, 277, while you still got 8.4% revenue growth year over year. That's not obviously a good situation. So we'll see what happens this year. It's supposed to be just kind of a downer year for Netflix, and that's a huge reason why the stock's down huge on top of all the macroeconomic factors that are affecting the market, right? Next year, expect to get back to growth. Now, what's interesting is I'm somebody that's never, ever in my life owned Netflix stock until recently, okay? I have actually bought this stock. Look at this. I actually bought this stock recently, okay? A few weeks ago. I made a move. It was $181.42. I picked up some shares. Not a ton. I got 50 shares. And obviously, if it goes down a bunch, I'll likely buy some more shares of this one. But yeah, I mean, Netflix has historically been a very, very overvalued company and just a very, very hype stock. And so that kind of always drove me away from Netflix. But I'll be honest, there's no hype around Netflix anymore at this point in time when it comes to stock price. And the stock has obviously just been absolutely devastated. And you look at like the forward PE, you look at the current PE, it's actually pretty darn attractive based upon where this company is at. And I expect this company to continue to grow for years and years and years to go in the future. So I actually look at Netflix and I actually think it's a really good opportunity now. And I've never been able to say that. In my whole life of being on the stock market, I've never been able to say Netflix is a great value. But now it has actually become a great value. And so that's why I started to pick up some shares. And if it drops on earnings, I'll pick up some more shares. We'll see what happens. If we're going to continue to kind of be in a risk on market this week, Netflix will probably make a pretty big upward move and kind of start coming back. But we'll see what happens with that. Okay. So Ally Bank, next up here. Now, by the way, and I purchased these shares actually in my Ally account. So I've actually never bought stocks through Ally till recently. I've just been kind of like testing it out and just kind of seeing, because basically I have this Ally Invest thing, and that's usually just where I keep like savings account money. But, it kind of led me to believe, I'm like, Ally is always known for savings accounts, right? And they've launched an investment product recently as well where you can buy stocks through it. But I was thinking about this, and here's the thing. A lot of people go to Ally when savings accounts are in a better spot, right? And savings accounts for the last kind of 3 years have not been in a good place because you haven't been able to get any interest. So everybody's kind of been driven away from even having any money in a savings account because it's pointless, right? But recently, Ally's been starting to up over the last few months. They've been starting to up what you get on a savings account. And so I'm almost thinking that's going to be at least a short-term driver of Ally's business model, because a lot of people really look at the savings account rates. Ally's big in that space and, set up accounts because, you can get a pretty good, return from Ally on FDIC insured money, right? So they're going to be reporting Tuesday. It's not a stock I personally own. But yeah, I'm going to actually watch that one because I'm just interested to hear kind of what their guidance is, if they're seeing more. I might even listen to our conference call just to see if there's more customers kind of incoming to them now, not just because they got an investment product now, but because of savings accounts finally being in a better spot than they've been in quite some time, which, if you want to talk about the one good thing that comes along with rising interest rates, it's the fact that you can actually, get at least a few percent from a savings account or something like that. And that's definitely the potential. If the Fed keeps raising rates, like by the end of this year, you're going to be able to get at least 2 or 3% on a savings account, which is going to be a huge change from basically nothing, which is where we were at just 6 months ago or so, right? Now, Wednesday after the bell, oh boy, does it get massive. Okay, you want to talk about shaking up the market? There it is, folks. It's right in front of your face right there. Good old Tesla, my Tesla. So Tesla's a huge market cap nowadays, $700+ billion market cap, so it's a big weight on the market, right? But bigger than that, and by the way, Tesla's had a tough year as far as its stock price has been, right? It's down 40%. And in a risk-off market, like Tesla's just not going to do well, right? That's just the way it is. Maybe, for the stage of the company's in, right? If you're in a risk-off market, like the stock price just isn't going to do good. But when it comes to Tesla, here's the deal, okay? This is a massive company for the psychology of the market. And if you want to talk about the market starting to try to come back to life, you need Tesla there. Without Tesla, it's very hard to engage in any sort of comeback for this market without that stock, because it is so big to Wall Street nowadays. It's so big to the psychology of the market, risk on, all those sorts of things. So this is a stock that everybody's going to be looking at now. I mean, nowadays, this is about the biggest it gets when it comes to a company that everybody really looks at, keeps an eye on, and is like, what's Tesla going to report here now at this point in time, right? Now, when it comes to gold, Tesla, if you want to know why this stock has performed amazing over the past few years, and obviously it hasn't performed amazing this year in this risk-off market, right? But I mean, this stock has been a massive winner since about 2019. Well, look no further than the game of Wall Street. The game of Wall Street is, what do analysts have for your EPS numbers and your revenue numbers, and what do you actually put up for your numbers, right? And oh my gosh, look at this. Every single quarter, Tesla beats numbers. In some of these quarters, they don't just beat, they destroy numbers on the EPS side and the revenue side. So, look at this. 4.96 billion was expected. They do $6 billion there, okay? 9.8 billion was expected. They do almost 10.4 billion. I mean, you look at some of these EPS numbers, 22 cents expected, 76 cents was made, right? I mean, these are crazy big differences. 47-cent loss was expected. They end up doing 43-cent gain. So Tesla's been on fire. Does this continue? I think is a big question that's kind of on everybody's mind. And, the expectations going in this earnings, I have no clue, to be honest. Especially, in revenue, I'm pretty confident in what I believe there. But as far as the EPS number, oh my gosh, this is such a messy quarter for Tesla because of China and basically the Shanghai factory being closed for part of the quarter. What does that mean for EPS, right? You got still supply chain messed up that last quarter. You got obviously inflation messing with so many different things. You obviously have transportation costs, right? Which, keep in mind, Tesla's awesome. It's an electric vehicle company, right? But guess what? In order to transport all these Tesla parts and, to transport all the Teslas around, guess what they're still using nowadays? ICE vehicles, right? Like ICE tractor trailers to transport them, right? Or think about this. Think about all those parts. They're coming on big, massive, ships. And so everything that kind of goes into that is directly impacted by the price of oil, right? And so the price of oil actually can hit Tesla, even though it sounds almost like ridiculous to even think that. It does end up affecting basically the cost of making a Tesla at the end of the day, okay? And so this is just kind of some food for thought in that whole situation. So it's going to be a messy quarter for Tesla's EPS. It can be anywhere in there, but we know Wall Street has gotten used to Tesla beating. If they miss, then there could be potentially more downside. Now, also will be interesting is on the conference call, Tesla's head of AI and autopilot's leaving the company. Now, this gentleman, from my understanding, was pretty brilliant fella, but I don't know what's been going on there, because from what I heard this individual took like a 4-month sabbatical. So that's what I heard. I'm not 100%. I don't work for Tesla, so that's just what the word on the street is. And so they haven't really been there for a while. Now all of a sudden they're going to leave the company. So I don't know. I mean, I've always been impressed with the Tesla autopilot and like what the cars can do versus any other vehicle out there in the world nowadays. But with that being said, obviously, Elon Musk has said many times, they expect to get to certain places when it comes to autopilot that they're still trying to get to those places. Let's just put it that way, right? And then this is important. So this happened just a couple days ago. Somebody tweeted out any plans to come down the price of cars, after supply chain and everything fixes itself. Elon Musk says if inflation calms down, we can lower prices. Now, in terms of Elon Musk, it's kind of always like a 50-50 if he's going to be on the conference call nowadays. We'll see. I mean, I'm hoping he's on the conference call, but we'll see. You never know for sure. He might be there, he might not be there. And so we'll see what happens with that. But in terms of Tesla, they've been raising prices. I mean, if you keep track of this company on a high level, you've seen it. They've raised prices just across the board, sometimes several times just over the past, 9 to 12 months. And, if Tesla ever wants to be, the company that's making 10 million plus vehicles, this has to be a company that everybody can afford, or not everybody, but at least everybody in the middle class can afford their vehicles, right? When I'm in Summerlin, when I'm in Henderson, which, in some of these areas in Summerlin, Henderson, they're kind of like wealthier areas, right? Teslas are everywhere. I mean, absolutely everywhere. I mean, every day I see more and more Teslas out there on the streets. But with that being said, if you're going to be a company that produces 10 million plus vehicles a year, which is obviously what Tesla wants to get to and what all of us Tesla shareholders, what we want to see this company get to over time, right? We're going to have to see price points, obviously not just people with a lot of money be able to afford Teslas over time, right? If we're going to talk about selling 10 million plus vehicles a year or something like that, right? So that's obviously important. We'll see what, is talked about there as far as that goes. Now, also, we'll see if there's any commentary around Twitter, if Elon Musk is on the call, and that's a whole mess in itself, the whole Twitter situation as well, okay? Then, Thursday after the bell, okay? Woo! Snapchat. So, I mean, you might think Snapchat is like, who cares about Snapchat, right? I'm telling you, Snapchat matters a lot, okay? And I made this dad joke. I said, Snap got snapped last earnings. Oh my gosh, okay? I thought that was so clever when I was prepping this video last night. It was like, oh, Snap got snapped last quarter. I thought it was so funny. Oh boy, I probably didn't get any laughs out of that. Oh gosh, okay? But Snapchat matters in a massive, massive way to the market because this can actually move Google McDougal, which is one of the biggest companies in the world, and it can move, Meta on Meta, okay? It can move both those companies, Metaverse, right? Absolutely, it can move both those companies. I mean, this is a company in the advertising space, and last quarter, it actually did move Google stock, and it moved Meta stock as well. And so, if they have some positive commentary, don't be surprised if Google McDougal and Meta both move up. If numbers disappoint, guidance is weak, then don't be surprised if Google McDougal and Meta move down as well, and it ends up pulling down the entire market on Friday, okay? So that one absolutely does matter. Everybody should keep an eye on Snap, okay? Now, American Express reports Friday before the bell. You want to talk about a company, you want to get an idea of where the economy's at? I think American Express is always a great company to pay attention to if you want to know what the state of the economy is and kind of what's going on out there. I always, and it's been a stock that's held up pretty darn well. It's only down 15% year to date. Now, in a normal year, 15% and you're in the month of July, right? That's a bad, your stock's having a bad year. But in this year, 15% down is a win. That's a W right there, okay? Huge W for American Express so far. Now, the interesting thing with American Express is I'm looking at their numbers here. And American Express is not a company I follow on a high level, but I was just looking at their numbers. I'm like, what is going on here? So, I mean, this is a company that is expected to have almost 22% revenue growth for this quarter, which is a huge number, by the way. But do 241 of EPS when 280 was the number last year, right? And even next quarter, EPS slightly up, but on 21% revenue growth, like, I don't know, it just seems a little disappointing. And American Express is the exact company I would usually think about in terms of like a company that would, whatever their revenue's up as a percent, their EPS is going to be up even more. So if the company grows 20% on the top line, I would always assume American Express is going to grow like 25% on the bottom line. But so yeah, it's a little bit of a shaky year for American Express, but I think it's just a very important stock to pay attention to with how the global economy is and how confident they're feeling in things out there. And remember, they're big in the travel space as well. So just keep that in mind there. Hope you guys enjoyed this video. As always, if you want to know exactly how to determine if a company is overvalued or undervalued, how to determine if a company has good, okay, or bad financial statements on a high level, surround yourself with hundreds of 6- and 7-figure members in our private Discord chat. You understand portfolio risk reward management, plus so much more. Check out pinned comment down there and apply to join us in the private stock group. Look forward to seeing you in there. Much love as always, and have a great day.